Traders at UBA expect an elevated rates at the treasury bills market as the central bank continues to keep a tight hold on interbank system liquidity. Dumebi Udegbunam, a fixed income trader at UBA, joins us now for a weekly wrap of those markets. Dumebi, thank you so much for your time. First of all, give us your thoughts on the close of trade today and the big takeaways.
Good afternoon. Thanks for having me. So today's market was quiet, despite heavy system liquidity of about 400 billion. We saw a quiet market with slight bullish sentiment on the long end of the curve. Like I said, this is owing earlier to bullish sentiments, and also this is the first month of Q4, so a lot of people are building positions to take advantage of lower yields to come because of the system liquidity we expect going into this month. We have about 818 billion maturing in the month of September compared to 538 that matured in August, so which shows a growth in inflows of about 235 billion. So that information has probably posed a bullish bias in the market. So we've seen bullish sentiments in the market, but it's been a quiet trading week.
Earlier, I was speaking to a trader, and she mentioned that the OMO auction that we saw this week was the first in maybe about 5 weeks. What's your take on the CBN's OMO auction strategy? Because she was pointing to the fact that she saw it as a way to sort of lure or to sort of satisfy foreign portfolio investors who maybe at this time would rather take their money out, but they are giving them the opportunity to invest in other assets.
Okay, let me correct you there on that. So before the last auction we had one in the last week in August. So I think she was referring to in July. So the last auction we had before that was in July 15th. So before that we had a drought till the last week in August, and now this one. This is just owing to the fact that there's a lot of liquidity in the market, and the CBN and the CBN with also Sarah debits are trying to look for a way to manage that liquidity. So yes, we've seen a more or less dearth in supply of OMO instruments in the market. However, they are still poised in managing the system liquidity through using the Sarah debits and also OMO issuances.
But would you agree that the motivation is probably linked to providing assets for foreign portfolio investors to invest in right now? Or do you think it's more linked to an effort to mop up liquidity?
So I think you can get the best of both worlds if the CBN plays the card right. Yes, one end to help foreign portfolio investors. Remember back in 2019, that's where they declared a dichotomy in the market, that is where they stopped local financial institutions and deposit money banks in buying OMO bills. So yes, you can take from that angle and also from the angle of managing system liquidity. As I speak to you today, system liquidity is about 400 billion in the market. It is the highest we've seen this week since July. So yes, like I say, you can get both of those worlds to help manage the system liquidity.
Okay, quick view on the foreign exchange market, and we are seeing more weakness in the Bureau de change and parallel market, where the Naira is somewhere closer to 530. What, in your view, is the implications of the widening gap in terms of the official rate, which is closer to 411, and, of course, that BDC rate at 530?
Okay, so in as much as we are seeing a decline in the value of Naira in the parallel market, we've also seen a growth in our foreign reserves. Our foreign reserves, as of right now, has grown by 3.5 billion, which is due to the special drawing rights by the IMF. But what we're seeing happen in the parallel market is a demand and supply issue. We're around the period where we're seeing a high demand from a lot of individuals to fund that different invisibles that cannot be met in the market, in the other side of the market. So, however, the INA window and the other official rates of the market are stable. So that growth we're seeing that decline or depreciation we're seeing in the BDC or the parallel market is due to the supply and demand issue. The demand is outweighing the supply. Since the announcement by the CBN in their last MPC in July, where they decided that they won't sell to the BDC again, we've seen a drop in supply in the BDC market by about 28%. So that alone is probably causing that rise we're seeing. However, in the other proper windows the rates have been stable.
All right, but again, to the point about the implications of that disparity in rates, Because we know in the past, the central bank would probably flood the BDC market with some cash to bring down that rate. But their posture right now is such that it seems they are pushing all available foreign exchange into the banking system as opposed to using the bureau de change operators.
So I think the aim or the reason why they're probably trying to do this is to get a unified exchange rate and to have every single exchange occurring to be documented and to actually be able to have a fair view of how our market should trade. So they've already stated clearly from the last MPC meeting that they will do everything possible and also increase their funding. There's been an increase in funding in the INA windows by the CBN and also in the SME windows too by about 25%, 30% by the CBN. That's why if you notice there's a stability in the Naira at that end. Like I said earlier, the supply and demand is really driving that BDC market, and probably if we go into Q4, the last half of Q4, when there's a solid plan put in place on where different banks have been authorized to have a trading desk or a desk where they can facilitate that, we might probably see a prompt convergence between rates.